Good morning, good afternoon, good evening. Welcome back for another video. Today we're going to take a look at Bitcoin and the DXY, the US dollar index. It's very important to understand what the DXY is and what it is not. If you like this content, please smash up that like button, hit the subscribe button, and leave a comment in the comment section. Let me know what you had for breakfast, lunch, and dinner, but let's go ahead and dive right on into it. So it was looking pretty scary over the weekend. I'm not going to lie. I did some trades. Weekend trading is the easiest trading. If you ever want to know what I mean by that, just send me a comment or send me a message on Twitter. I'll happily explain to you why it's very simple to understand when to long and when to short on the weekend. I'd made like $150, but I'm just, testing things out, throwing things around. But looking at the charts, it's like, hey, today's a good day, good-ish day. It felt like it could have gone a lot worse. We got to the $37,000 range for Bitcoin, lower 2,500s for Ethereum. But I just, here's the deal. The DXY. Let's properly understand the DXY. So what is the US dollar index? Okay, it's a very high score, highest score since around the COVID crisis. You can see that it's very much interacting with its own bull market support band, just like Bitcoin. I mean, let me pull up Bitcoin here. We've gotten support and rejection. Last week, we got rejected right at the bottom of the bull market support band. So for the DXY, that has acted as support over the last several months. I mean, when is this? This is May of 2021, June of 2021 until today. We've been above the bull market support band for the DXY, and we've been just bouncing right off of that. And so now we're seeing that it is just pumping like crazy. And an appropriate comparison for the DXY is, don't think of it in terms of like the purchasing power of the dollar, because the DXY is rising like crazy, and yet inflation, your purchasing power is going down. So that's not even, that's a very, very small portion of the equation. In the DXY is more so a measure of fear versus greed. And it's not entirely a fear-greed index, but it's helpful to look on a global scale, on a macro scale, how much fear there is in the system when you see the dollar rising. I mean, look at COVID, and that's why I have this chart lined up so far back to March of 2020. You see the US dollar spiking really hard. And why is that? That's because everyone was terrified. It's like, oh no, we're all going to die. I mean, those first couple weeks, it was a time of confusion, of fear, of pretty much panic, a lot of panic around the world. And so the dollar rallied because people were fleeing to safety. They were going risk off. And then look at all those bounces off of its bull market support band. But then once it broke through the bull market support band, it was game on. The stock market took off. The crypto market took off. The crypto market took a little bit, but in October of 2020, it just shot off like a rocket. And so now we are at the scariest point since COVID. Since COVID, at least, all right, March of 2020, I know I'm an American, and so I need to think not as much about how things like COVID affect America, United States of America, but this is the US dollar we're talking about. So United States, yeah, the US dollar rallied at when we all like woke up and realized, oh wait, COVID is actually a threat. It's a big threat. And so as that fear came, people went risk off and sold stocks. They transferred their holdings into dollars. And we saw Bitcoin take a huge crash, and then fortunately it was a V-shaped recovery. And so right now, yeah, again, what I'm saying is we are at, in terms of fear, in terms of people wanting to go risk off, we are at the scariest moment since COVID. And how could you argue against that? Really? It's like we have the fear of interest rates raising, which it's like, you're going to blow over this house of cards. You have this war with Russia in the Ukraine, and you have a combination of things, and it just of uncertainty, feeling like we're teetering. I mean, the global food supply chain, there may be issues with that. I'm not quite worried about that. I think that fear is selling very well right now, but we'll see about that. But then here's the fascinating thing about this is that, yes, inflation should and will have an effect on the US dollar index, because you got to think about this. People are exiting their positions, their stock positions, because it's too volatile. They want stability, but they're exiting into something that they know is going to be worth 7% less a year from now than it is now, or maybe 8% or 9% less a year from now than it is now. It's like, we know, those of us fleeing to the dollar, we know that this is not a viable long-term solution. This is a short-term play. So what happens? And then look at the RSI down here. The DXY is very, very overbought. The US dollar is overbought on a huge amount here, more overbought, most overbought than since COVID. And so the US dollar is overbought, and we are way above the bull market support band that eventually, at some point, through the natural progression of things, the dollar index will go down. Will it go down to the bull market support band? I would think, yeah, that it would, give it a few weeks or months, that it'll go back down to the bull market support band. And eventually, when you factor in inflation, this will have to go down, go below its bull market support band to an extent. I mean, it is one of the most reliable and safe currencies, fiat currencies in the world. But I would think at some point, given the inflation and given the fact that the dollar is actually more inflationary than a lot of other cryptos around, or not cryptos, fiat currencies around the world, that, yeah, at some point, people are going to flee from the US dollar into other things, maybe into other currencies, maybe into cryptocurrencies, maybe back into stocks. It's like we're playing this game of hot potato. Where are we going to put our dollars? Because we know holding it in the dollar is not viable. And I think that this is a better indication of whether you should be bullish or bearish than the fear greed index. I mean, we know the famous Warren Buffett saying, be greedy when everyone's fearful and be fearful when everyone's greedy. But look at all the way back in 2017. It was just, 2018. It was just a continual year of fear, and then medium, fear, medium, until, what was the fear greed index at before that minor capitulation in December of 2018 in November. I mean, it was at 49, but there's times here it's at 27, 18. And so if you were greedy at that time when everyone was fearful and bought Bitcoin at $6,277, then you would have lost half of your investment in the span of 2 months. And so is that really the fear greed index? Is that really the most reliable indicator as to when you should buy? It's a good indicator. I mean, look, if you bought in COVID, if you bought in the summer, if you bought in September, I mean, at least for short-term gains, that would have been great. Right now, maybe not necessarily. I mean, when Bitcoin was at $32,000, fear greed index of 13, a score of 13, I would say under 15, that's generally a good time to buy, at least for a short-term gain. But, the DXY being oversold and being basically where it is right now, just like way oversold, going parabolic, really, and to an extent, to the extent that the dollar is generally much more stable. I mean, very stable in comparison to Bitcoin, super duper stable for it to be going. I would consider this somewhat parabolic, and so it will come down to earth. When will it come down to earth? It may be sooner rather than later, because we have CPI numbers being reported again this week. And last time CPI numbers were reported, this happened. We went from a score of 97 down to 94-ish, and so we'll see. We'll see what happens. But I would expect high CPI numbers again, maybe higher than expected. I think that we are going to, if you can see my hand, all right, there we go. We're going to kind of go like, up to 9, 10%, something like that. And then everyone's going to panic, and, everyone's going to think it's over. And then we'll go down, I think, to something like 4, a score of 4. And that's going to be the new norm. That's my opinion. I don't know. We'll see. But I don't think 2 is going to be the norm anymore, in that they're going to try to sell us on a CPI score of 4. And that's just going to be life. We will see. But I would expect some kind of a move up as with Bitcoin, and even this week, as we get those CPI numbers, we see that they're higher than expected. My opinion, that a good short-term play would be to long Bitcoin here. I mean, that's given everything, if another nuclear power plant gets on fire in the Ukraine, all bets are off. But short-term, I'm bullish. This week, I'm bullish. Next week, we'll see. But with CPI numbers being reported, dollar index should drop and Bitcoin should rise. Now, where will Bitcoin rise? Well, bottom of the bull market support band now, the 21-week EMA is dropping really hard, and the bottom of the bull market support band now is at $44,000. And I think that we will see another rejection there, maybe this week. I really could see it being this week. And we'll see maybe into next week that we'll see another rejection there. And at some point we will break through. I don't know. You guys know my opinion on $30,000 being a sort of a bottom. I don't believe we are going to see a weekly close below there. Should I say ever again? I've made the case, and I'm not going to make that case again. But yes, I do believe that. So we will see. But yeah, for this week, I don't think many people are bullish, but with the CPI numbers being reported and expecting them again to be higher than what we're expecting, I would expect some kind of a short-term increase in Bitcoin. Over the next few weeks, who knows? I'm not particularly bullish for the remainder of the quarter, which we're 3.5 weeks away from, so we'll see. A couple other things I wanted to take a look at before we head out is the 200-week moving average. This is huge. Guys, if you watch my bear market buying guide, I would recommend that you check it out, that you buy $27 one-time fee, worldwarbitcoin.teachable.com. I talk about the significance of the 200-week simple moving average. And, the last time I looked at this, the 200-week simple moving average was around $18,000. That was in January. The higher this goes, the more happy I am. Basically, and it's going to rise forever because, we've never had a monthly close below the 200-week simple moving average. We have had some weekly closes a hair below it, but that is the optimal buying time. So could we wick below the 200-week simple moving average? Absolutely. But I believe that the 200-week simple, that around the time that we touch the 200-week simple moving average before the next halving, that Bitcoin will be around $50,000. And so the higher this rises, the happier I am, and it will continue to rise. And, for it being just 2 months, for it to rise $2,000 in 2 months, that's a good thing. And I want to keep seeing this rise. I want to see us hold in the 30s and going higher into the 40s, maybe the 50s, so that this can rise. And then at the proper time, when we go down to the bull market support band, I am all in with Bitcoin and probably with Ethereum and Litecoin as well. I'm working really hard right now to make some extra income so that at this time, when this time comes, I can be ready and I can jump on it. And this is a time, in my opinion, to work hard and make extra money, to not slack, but to make extra money so that you can pounce when the time is right. I mean, really, if the 200-week simple moving average is going to rise to $50,000, which I believe it will, maybe I'm wrong about that, but I believe that that's going to happen. Then now with Bitcoin at $39,400, I think it's also a great time to buy. But, there is a fear that we could go down to the 200-week simple moving average now or within a few weeks or a few months. So be it. But I'm going to be ready. I'm going to be very eager to be buying at that time because it's like a brick wall, in my opinion, a very firm wall that we will break through that to the downside one day, but I'm thinking more like a decade from now, not anytime soon. And the last thing I want to look at is the MVRVZ score, just to see where we are. Current holders, how much in profit are they? So this is the realized cap, the current market cap, which is $730 billion over the realized cap. In other words, how much has every Bitcoin that has ever been sold, or what is the sale value of the 19.1 or so million Bitcoins in existence? What was the last selling price? What's the total dollar amount of the last selling price of every Bitcoin that's ever been held? And I very strongly believe that we've had periods where we were below, where the average Bitcoin holder wasn't a loss. I don't believe that, that given the fact that we did not have this extreme move to the upside, we went to $69,000 and only had an MVRVZ score of 3.5, which means that, holders were about 350% in profit, 3.5 times in profit. And right now they're about 100%. Well, actually, yeah. about 100% in profit as of right now. And that includes coins that are lost. And so because that includes coins that are lost, I find it pretty hard to believe that we will ever, because those coins are so much in profit. I'm talking about something like 4 to 7 million coins that were bought at $1 or something like that and never sold. And so those coins are so much in profit, and they may be lost or they're going to be held forever. That that factors into the idea that because they're so much in profit that it's very unlikely that we would go below the realized cap with Bitcoin. So 458 million, 730 million, that's somewhere in the 20s. I can't do the math in my head right now. That's about $23,000, $24,000 that in my opinion, it's very unlikely that Bitcoin will go below $23,000, $24,000. And of course, that's rising as well as more Bitcoin is being sold above that level. So MVRVZ score of 1, bullish. Could it go lower? Absolutely. It hasn't gone lower than where it is now since September of 2020 when Bitcoin was hovering around $10,000. So we'll see. But I would say on a big picture perspective, it makes more sense to be bullish now than it does bearish. I know that there are people calling for Bitcoin to go to the teens or to go into the lower 20s. Logic, could it happen? It could happen. Logically, it doesn't make sense. I just looking at numbers that they're just looking at the charts, but looking at numbers that like this, it doesn't make sense. It just doesn't. So if we had a blow off top, it would make a lot more sense. But we didn't have a blow off top. We didn't have the opportunity for people to sell their Bitcoin at $200,000 to raise that realized cap yet, at least. And so there's just the opportunity for the realized cap to rise to a point where we would cross over it to the downside is limited. So anyway, that is all I have for today. I hope you have a wonderful week, a wonderful rest of your day, and I will most certainly be seeing you in another video. Peace.